Hello, everybody. Thank you for coming today. My name is Jeff Gibby. I'm going to have the pleasure of reading a legal disclaimer for you and introducing today's guest. So, welcome. It's good to be here. Good evening for those of you here in the U.S., and good morning or good afternoon or good night for those of you that are international. Welcome. We will be recording today's session, and yes, we will put it on YouTube as well. Thank you, John. So let's go ahead and read the legal disclaimer. We're going to go ahead and get underway here. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. This is not a direct recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. We've been working with Steve and Specialist Trading for quite a few months. I don't even want to count them, but we've developed their methodologies into MetaStock. They look really, really good. I don't know how familiar you are with Steve Primo, but he's a very, very good trader. He's been in the market since I was 3 years old. And really, I think you're going to like what he has to say. I've had a lot of opportunity to learn about what he's teaching in some of his strategy setups, which is kind of always the case when you program him into MetaStock. But in any case, I'd like to invite Steven in. And Steve, we're going to go ahead and let you talk.
Thank you, everyone, for attending. Sorry about that delay. Thank you, Jeff, and I apologize for the technical difficulties. But I thank you for taking time out of your Wednesday afternoon, and I thank all the good people at MetaStock for giving me the opportunity to speak. As you see here, I'm the president and founder of Specialist Trading, and for those of you who are unfamiliar with Specialist Trading, we feel we are your premier online source for education in trading all of the markets, virtually all the markets, anything from stock market to the E-mini to the Forex markets. Now, just to give you a little bit of background about myself real quickly, I have been trading for 36 years. I started out my floor career on the floor of the Pacific Stock Exchange, actually. I was on the floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. I've traded through, while I was on the floor, just about every market environment imaginable. I traded through the crash of 1987. I traded through the great bull market that ensued after that. I traded through quiet markets, volatile markets, straight up, straight down markets. I've seen and been involved in just about everything around, so I'm really familiar with a lot of different tips and techniques. I left the floor in the mid-90s to manage money and to also start exploring different markets and to trade my own account. And then roughly about 7 or 8 years ago, I started becoming the director of education for a number of online sites to teach their systems and methods. Roughly 4 years ago, I decided to only teach everything that I personally trade, the things that I've accumulated over my 36 years, and to teach and mentor my students. So this was the beginning of Specialist Trading. So this is, as we said, an educational site, even though we provide all of our members with strategies and signals for entering and exiting the market. We're really about educating you so that we can empower you with all the insights, the wisdom, and the trading strategies from the floor so you can do it yourself. Now, what I want to talk about today is my most consistent techniques for trading the markets. These are techniques that I learned on the floor, and I want to share them with you. I'm going to share with you 2 edges that you can actually start using as early as tomorrow if you'd like. They're great edges. You can apply them to any technique or any strategy. And as well, I'm going to show you how they formulate one of our most consistent strategies, that's strategy number 4. And then I'm going to show you our new add-on from MetaStock that actually generates the signals, the setup bars for strategy number 4. So we're going to give you a lot of information and show you a lot of great things. But before we start, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results, and I'm going to give you a lot of information. But please remember that we can in no way guarantee that any of the results will be repeated in the future. So as you're taking a moment to view our disclaimer, I'd also like to mention that I know a lot of people like to ask questions, but it seems to have the presentation flow a lot better if we wait till the very end. So I promise I'll get to each and every one of your questions. I know we kind of started a little late here, so I'd like to get the presentation up and running. So if you happen to have a question while we're in the middle of the presentation, just write it down And I promise I'll get to it. If you happen to come up with a question once we conclude, I'm going to leave you with a phone number as well as an email address where you can contact us, okay? So there's lots of ways to ask. Just please wait till the very end of the presentation. Thank you. I really appreciate it. Now, I'd like to start off my presentations with a little statistics for you, and I don't want you to worry, but the facts state that 80% of all traders will ultimately lose money. And when I say lose, I don't mean that you're going to be going through some type of drawdown. It really means that 80% will ultimately lose all of their trading capital. This means that 15% of all traders will just break even, and ultimately it means that only 5% of all traders will be consistently profitable, okay? Now, if we look at that on a pie chart, as represented here, this represents a percentage of traders who are profitable. This large portion in red represents the percentage of traders who will fail. This smaller slice here in blue represents the ones that will break even, and that small little slice in green represents the small percentage of traders who will ultimately have consistent gains. Now, we have to ask ourselves, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? You know, through my 36 years of trading, I really believe that the markets are like a big pie in the sky there. There's enough profits and gains, enough for anyone to take. It's never ending. It's just if you want some, come and get it. But why is it only that 5% are able to consistently capture those 5% gains? Well, we feel at Specialist Trading that they have an edge. Whether these traders know it or not, they're either doing something or not doing something that the majority of the other traders are doing. And this is their edge in trading, which allows them to capture that 5% and have consistent winners. But the only trouble is everyone thinks they have an edge. I mean, I'm sure you think that your edge is your strategy or perhaps your indicators that you use or your way of discerning what the news is. So everyone thinks they have an edge. And I know personally, when I first started out trading, I thought I had a keen edge as well, but I had a very difficult time. It wasn't until my mentors explained to me what a real edge is, and I want to explain to you what my mentors taught me on the floor. They said that, Steve, an edge is something that sustains your trading. In other words, it must sustain you in any environment, whether it's a swift market, whether it's a volatile market, whether it's a quiet, rangy market. It must sustain you at least adequately throughout these different type of environments. And at the same time, it must be something you can rely on, because every edge, every strategy, every tip or technique will go into some type of losing phase or drawdown. So you have to be confident that you can rely on it, that it will eventually come back and be resilient. But ultimately, what they said, the most important thing that you have to have in an edge is that it's consistent. Okay, what do we mean by consistent? Well, basically, everyone tries to go for the home run. I know I did when I first started trading. And what my mentors taught me is really the secret to success is about hitting the singles. Every once in a while, sure, you will hit that home run, but a true edge is consistent in that it's 2 steps forward, 1 step back. You hit those singles, and so that you're able to be trading 10, 20, 30 years down the road. So we're not looking to hit home runs, even though they may come from time to time. We're really looking for those nice golden nuggets, those nice little slices of the pie here that will, have us consistent throughout the years. So this is what you need in order to really sustain yourself with an edge. You need to have these 3 qualities. So here's what I learned while I was trading on the floor. I've made no secret about it. I teach it in my classes and on my website that my first year as a specialist, even though some people think that a specialist has a license to steal, I really had a difficult time. In fact, I really couldn't make ends meet. I would have 3 or 4 fantastic months followed by 1 disastrous month where I'd give everything away. And I'm sure a lot of you are familiar with that. You probably understand that. Maybe you're going through that right now. But it was very discouraging, and I really thought perhaps there's not much time left for me as being a specialist, because I just couldn't seem to make ends meet while everyone else seemed to be making money. I was just breaking even and not able to sustain profits. So I finally came in contact with these elite traders on the floor. These were specialists themselves who actually taught me that in order to be consistent, in order to gain these edges, I have to simplify my trading. That's how I'm going to be on that road. Because I thought, I was always trained that the more things you pile onto your plate, that's the greater chances you have for success. But what they taught me is that in order to achieve that consistency, I have to keep my trading plan simple. And what they labeled as useless noise is what most people have, these preconceived ideas that will make them prosperous. But actually, it's the exact opposite. When you keep your trading plan as simple as possible, that's when you'll get onto that road to consistency and onto that road to success. So everything in specialist trading is rooted in this simplistic attitude. And that's my goal, to teach you how to trade with this specialist edge, which is rooted in simplicity. Now, a lot of what I'm going to share with you today, I'm sure you've probably seen before, and you'll probably say, this is just too simple. I mean, why should this work as opposed to something else? It's because, as I've learned over the years I've been trading, it's the simplest things that work. So what I'm going to share with you today, possibly you've heard already, or possibly you believe are just far too simple to work. But just trust me, in the examples you'll see, I think that you'll really see that there is an edge to this simplicity. All right, so here's what you're going to learn today. I'm going to give you two edges. All right, the first edge is designed to get you on the right side of the market. It's probably our most powerful edge that we have at specialist trading because we incorporate it in virtually everything. And the second edge is an entry technique. It's designed to fine-tune your entries. Okay, and you're going to see how both of these components come into probably our most consistent strategy, which is strategy number 4. So I'll show you some recent trades that involve these two edges, and I'll show you how they were generated using the add-on from MetaStock, the Expert Advisor add-on from MetaStock. So you're going to see a lot of examples here today. Once again, I thank you for holding any questions you may have. Sorry we started a little late for those of you who may have just joined us, but I'm going to give you a lot of free and great information today. All right, so why don't we start out with an example here. As you see, this is a chart. This is I believe a 5-minute chart of the E-mini. And let's see, has this ever happened to anyone before? Let's say you see a chart like this open up, the market opens down a little bit, but then you start to see some support. So you say to yourself, well, you know what? I think I'm going to take advantage. We look like we have some support here. The market appears that it may be starting to go up. So what I want to do is purchase it because we have a nice bottoming formation here, and perhaps we're going to go all the way up and fill this gap. So what you do is you jump in and you buy, okay? And then guess what happens? Does that look familiar to anyone? I'm sure this has happened to a lot of people I know firsthand because this is the way I used to trade when I first started out trading. Or how about this? We have UPS here. We have a daily chart. As you can see, the stock since the beginning of the year has been going nearly straight up. But at this point, it starts to roll over and curl over, okay? So you think, hey, possibly we've got some type of a top action in here. And if we have a real short-term uptrend line, we've broken that, so you can jump in and sell. All right, so you jump in and it goes down for one day, but then look what happens. By the end of the month, we're making new highs. Does this look familiar? I'm sure this has happened to a lot of people. Well, what if there were a tool or some type of an edge that could not guarantee but give you a high probability for being on the right side of the market? Well, there is a specialist trading, and this is what we call our buy-sell line. This is our first edge here, the buy-sell line. It's probably the most important tool we use at specialist trading. It's so important we incorporate in virtually everything we have, but at the same time, it's the most simple tool. And you're going to see how simple it is because all the buy-sell line is the 50-period simple moving average. That's all it is. But here's how you use it correctly. In order to use the buy-sell line properly, all you have to do is ask yourself this question before each trade. But you must ask yourself this question, okay? Before you pull the trigger, ask yourself, where is price in relation to the buy-sell line? Okay, I'm going to say this again. In fact, you may want to write this down to have it by your computer tomorrow before you take a trade. Plot a 50-period simple moving average and ask yourselves, where is price in relation to the buy-sell line? Because if you ask yourself that before you pull the trigger, you're really only going to come up with two possible scenarios. Because if price is above, then you're only going to be looking to go long or looking for buy setups. And if price is below, then you'll simply be looking to go short or for sell setups. That's it. Now, see, I told you it was going to be simple when we started out here, but let me show you how powerful this is. Let's go back and look at those examples again. That first chart we had of the E-mini, we originally wanted to buy, but we add our edge, our number one edge, which is the buy-sell line, and we ask ourselves, where is price in relation to the buy-sell line, the 50-period simple moving average? And obviously, price is below. So if price is below, we have no business even considering going long. So you would have just saved yourself a lot of money and a lot of heartache entering into this trade to go long. How about the other scenario? We wanted to go short UPS, okay? It looked like it was topping out, but we didn't use the edge. So we add the 50-period simple moving average, the buy-sell line, and we ask where is price in relation to that buy-sell line? Well, obviously, price is above. So you see now there was no reason to even pull the trigger to go short. There's no reason to try and swim upstream It's much easier to swim with the current at your back. Now, I know a lot of people would say, well, Steve, you're right. This stuff is too simple. How is this going to work? I've heard other guys, other educators talk about a 20-period simple moving average, or some have even talked about a 200-period moving average. Well, let's look at some other examples to see how important it is. Let's look at some stocks, okay? Here's a chart of Apple, okay? We all know that Apple had its tough times this past year, but it started to firm up. As you can see here, going back to, I believe that is October, November, we could have exited any holdings we had in Apple once we traded or consistently below the buy-sell line. You would have sidestepped all this downward movement, and now once that have consecutive closes above, you could start looking for buying opportunities. Okay, you see how simple that is. You would have saved yourself a lot of heartache and most especially a lot of sleepless nights. How about this stock? Okay, we see here we have, I believe this is Best Buy. We have a very nice downward movement here because we're below the buy-sell line. And then right when we start the brand new year, we pierce above the buy-sell line. So this is if you were short or if you were out of the market but were interested in purchasing it, you could have simply jumped in at this point. Let's look at the E-mini SP because this technique and this edge transfers over onto all markets in any time frame in any direction. This is an example of the E-mini on a 5-minute chart going back to the first day of May, just a couple of weeks ago. We see for the entire time we were below the buy-sell line, so there was no reason to even consider going long the E-mini. And then the very next day, guess what? For a good part of the day, we were above the buy-sell line. So all you would have been looking for would be buy setups. And if you want to look at a daily chart, you can see the same thing going all the way back November, December. We've been above the buy-sell line, so there's really been no reason on a daily chart to even consider shorting the E-mini. How about the Forex markets for those of you who like to trade currency pairs? The British pound, most of this year was acting very negative. Well, we knew as far back as January, February that we had consecutive closes below the buy-sell line on a daily bar chart, and you would have been out or short the British pound. Same thing goes for if we look at a weekly chart of the yen, euro yen. We know that the euro yen has been going virtually straight up, but on this weekly chart, we knew well before that we were above the buy-sell line, and if you were investing, you should have been only looking for long situations. Okay? This also works on ETFs or indices. Okay? We can look at REITs here. Housing REITs as we're above the buy-sell line. You can also look at gold, GLD, the ETF of gold. A lot of people have been saying, boy, gold has been acting terrible. When's it going to bottom out? Well, if you're using this technique, you really don't care because all you're looking for is shorting opportunities. Until you have consecutive closes above this buy-sell line, you won't even consider going long gold in the ETF. Or we're also looking at USO, the the oil fund, as you can see here. Until we have consecutive closes above here, you would not go long the oil fund as well. And then if you want to look at the spiders, the ETF of the S&P 500, if we look at a weekly chart going back a couple of years as early as 2012, we've been on a weekly basis above the buy-sell line that entire time. So if you were looking at a portfolio for long-term investments, you would not have shorted anything in the market and you would have remained long until you saw that we had consecutive closes below that buy-sell line. You see how simple that is. Now, a lot of people say, well, Steve, sure, this is all well and good because we've had, a really nice run in the markets. They've been trending very well, but how do we know this works all the time? Well, you remember about 5 or 6 years ago, that little thing called the beginning of the recession in 2008. Do you remember how the markets virtually just fell out of bed and a lot of people lost all of their savings and a lot of people, were just left holding the bag with so surprised that the market just went straight down after that? Well, if we look at a weekly chart of the S&P index, we see as early as January of 2008, the market itself was giving consecutive closes below the buy-sell line. Okay, so at the very least, you could have, if you were long, you would have moved your stops to tighten up a little bit to lock in some gains, or you could have looked for shorting opportunities if you were a more aggressive trader. So you see how simple this rule is, but how powerful it is at the same time. So ask yourself, do you think an edge like this could have helped your trading this past year? In fact, I'd like to give you a homework assignment. I'd like to, all of you, regardless of what you trade, what market, what time frame, if you're an investor, a day trader, if you trade the Forex, the E-mini, or stocks, plot a 50-period simple moving average on all of your charts, and then go back and look at your last 5, 10, 20 trades. I can almost guarantee you that your losers were because you were out of sync with this simple rule. You were buying when you were below the buy-sell and selling when you were above, and vice versa. So this is a tremendous, tremendous tool to get you on the right side of the market. All right, let's go to our second edge now. This is an entry technique. This is not a strategy. A lot of people, especially our new students, have difficulty with this because they think this is a strategy or some type of system. This is just an entry technique that you can add onto any strategy that you currently trade, or you can use with one of ours. But before we go into it, let's go over the reasons why most traders will enter a trade. This is the way I used to trade, and I'm sure many traders still trade this way. You'll say to yourself, well, the market is way too low. It's oversold. It's never been at these low levels before, so I have to enter, probably most likely to buy. Or they say the market is too high. Okay, we've never been this high. I know a lot of traders have been saying that lately, saying we've had this tremendous run up. It's far too overbought. It's got to be shorted. There's no way it can sustain these highs, so this is why I'm entering into the trade. Also, a lot of traders make their trading decisions based off a trading guru. Either this is some type of trading room or some subscription service, but you basically mirror whatever this person does. So whatever his decisions are, they are your decisions as well. A lot of traders are technicians. They virtually have 10, 20 indicators plotted on their screen, and when everything lines up, this tells them either to enter or to exit a trade. I think the most popular reason for entering a trade is fundamental news. I know of traders who won't do anything until they hear the job claims report or until they hear the economic news or some type of earnings report. Okay? And then lastly, many traders base all of their decisions off of what TV commentators say. They'll wait for their TV show or they have the TV on all day, and whatever these commentators are saying, the pundits, that's what will tell them what to buy, what to sell, what issues to get involved in. Now, there's one common denominator with all of these different main reasons, and it's that they're all taking their cues from an outside source. In other words, they're all coming from outside the market, and they're not focusing, in our opinion, on what you should be focusing on or the most important thing, and that's virtually the chart in front of you. So see, what is needed in trading is a clear-cut plan for entry that is based on what the chart is telling you and not on what an outside source is telling you. See, so many people rely on outside sources, whether they're trading rooms or chat rooms or indicators or fundamental news, because I think what it does is it takes them out of the game and they feel less pressure. They feel like there's no responsibility on me, and if I lose, well, it really wasn't my fault. But at specialist trading, we want to make you a part of the process. So we want you to see what's on the chart. Remember, keep it as simple as possible and listen to only what the chart is telling you. So this is our second edge. This is the confirmation method. Okay, so what exactly is the confirmation method? It's the verification that the trend has resumed in the desired direction. This is your signal to enter a trade. A specialist always waits for his trade to be confirmed before entry. Okay, now I know that may seem a little wordy and a little nebulous, but what that actually means is that best way I can explain it is through a little analogy or metaphor. Imagine you're at a train station and you want to get from point A to point B, and you're waiting outside at the queue, and you see a train coming down the tracks, but it's headed in the opposite direction of where you want to go. Would you jump on that train? Most likely no, because it's not going in your direction. But this is the way 99.9% of all traders trade. They'll trade when something is going straight down, they'll buy, and when something is going straight up, they'll sell. What you want to do is wait for a train to come down the tracks that is headed in your direction. And that's the train you want to jump on. Okay, that's the confirmation that you're getting on board something that's going in your direction. And it's the same way with this technique. Okay, so here are the rules for this technique. Remember, this is not a strategy. This is not a system. This is simply a technique that you can actually apply to any strategy you currently trade. Okay, we believe it will increase your odds for success. So let's say your strategy, whatever it's based on, let's say it's based on the full moon. It really doesn't matter. But let's say it issues a buy signal. Rather than just simply buying at the market or simply placing a limit order, only buy once price trades one tick above the previous bar's high. Okay, and continue to follow this and track this until you enter or until the signal is over. Okay, Let's say your signal gives you or your strategy gives you a sell signal. Well, instead of just selling at the market, only sell once price trades one tick below the previous bar's low. Okay? This is the confirmation that you're headed in the right direction, in your desired direction. Okay? So let me show you some examples of how this works. It's actually very simple. Here's that same example we looked at earlier in UPS. Okay? Remember, we originally wanted to sell this, but we added our first edge, which is the buy-sell line. We ask ourselves, where is price in relation to the buy-sell line? Price is above, so there's no reason we should even be thinking about selling. So we totally negate that idea or that trade. But let's say another strategy you're following actually gives you some type of opportunity for a buy. Rather than simply place a limit or buy at the market, use the confirmation method where you're going to purchase once it trades one tick above the previous bar's high. And you continue to track this until either you get filled or until the signal is negated. Now in this case, you would have entered once we traded above, and there you see it's off to the races. You see, it wasn't wrong to be entering. In other words, had you decided to enter up here, that would have been okay because you ultimately would have ended up higher than where you entered. The problem is, as most traders know, when we enter into a trade, we want to see it go in our direction. The moment we buy, we want to see it go up, right? Or the moment we sell, we want to see it go lower. We don't want to sit through this kind of a drawdown phase. And I know firsthand that most traders, if you had purchased up here, you probably would not have sat through this downward movement for the next 2 or 3 days. You most likely would have thrown in the towel or got stopped out. So we want to alleviate that by simply waiting for it to be confirmed. And once you would have entered, you would have seen that there was really no drawdown at all, and you would have had everything go in your direction. How about that other technique we had, or that other setup we had for the E-mini? Now, we originally wanted to buy, but we added the buy-sell line. We ask ourselves, where is price in relation to the buy-sell line? And price is below, so we're not even consider going long. But let's say another strategy gives you an opportunity to go short. It says, actually, this is a nice shorting signal. So rather than just sell at the market or place a limit order higher, what you want to do is use the confirmation technique. That's wait for price to trade one tick below the previous bar's low, and that's where you ultimately want to enter. And once you enter, you see it's off to the races. Very nice gain in that particular setup. Now, as I stated, it's not about getting you in at the very high. In other words, the confirmation technique is not based off of getting a better price for you. We're really not interested in getting the highest price to go short or the lowest price to go long. We're more interested in the minute we get in, we want to see the price head in our direction. Because as I stated, the worst thing you can do is be in a trade and it goes the opposite direction the moment you get in. It's very discouraging. I know firsthand, this is the way I used to trade. So it's very difficult. So this technique works in any market. We'll show you some more examples so you can see how it works. But remember, this is just an entry technique. This is probably the most common mistake my students make is their eyes light up when they see this and they think it's a strategy. This is just a technique you can virtually add to any strategy you like. All right, here's a chart in Tiffany. This goes back just about a month ago. We see we are well above the buy-sell line, so we're only going to be looking for buy setups, okay? Now, as we see here, we had a nice little top. So most traders, when they look at support and resistance, will say, well, the minute we break out above, I'm going to buy. But rather than do that, what we want to do is use our confirmation technique. We're only going to buy once price trades one tick below the signal bar high. And so we sidestepped all of this downward movement, and we ultimately enter when price trades one tick above the previous bar's high. Okay? Now, as I stated earlier, it was right to go long Tiffany. There was nothing wrong with buying this. It was just that your entry technique was a little faulty. Okay? So had you purchased it right here, ultimately you would have had a nice gain. But the point is, most traders would not be able to sit through this minor sell-off. They'd probably get stopped out or throw in the towel. So we don't want to see you go through that and get discouraged. All right, here's another chart in Apple, okay, a daily chart in Apple. We see here that we're, for most intents and purposes, we're below the buy-sell line, so we're only going to be looking to sell. And so we break support right here at this level, or many traders would say, well, we should be shorting this. Apple broke support, it's most likely going lower, which would probably be a good idea. But remember, it's this little upward movement that would probably stop you out or I don't know if you could sit through that loss of 20 or so points. So what we want to do is apply simply the technique where we wait for price to trade one tick below the previous bar's low, and that's where you'd enter. And you see how much more easier it would be simply to get in and have price go in your direction, okay? We see this in I believe this is a 10-minute chart of the E-mini. Price broke out above the buy-sell line, so you're looking to go long. Rather than just buy at the market on this intraday chart, use the intraday or use the confirmation technique and use that as your entry point. Okay, here's another chart. The E-mini, we're below the buy-sell line. This is a 10-minute chart. We employ the confirmation technique, and that's where we enter. See, once again, had you sold right here, that would have been fine, but then you would have sat through this and you would have started second guessing yourself most likely. You would have said, boy, maybe we bottomed out, maybe I shouldn't be short. And you would have, had a lot of, thinking to do about whether you should be short the trade. It's much easier to wait for this confirmation method, and then you're in sync with the market going to the desired direction. Okay, here's a weekly chart now. If we look at it, there's a weekly chart of I believe it's a Forex chart, the euro dollar. And as we can see, for most part, we are below the buy-sell line. If we had some type of selling opportunity, we can see that we would simply employ the confirmation technique, and that's where you would enter below the buy-sell line. So that's fine. Even if we had one day above, your entry would be below. So that's perfectly admissible on this weekly chart, and 1,100 pips to the downside. So let's review the confirmation method very quickly. Remember, listen only to what the chart is telling you. I know that so many traders listen to outside sources. I know firsthand because this is what I used to do. I used to have so many indicators on my screen. I used to be involved in so many trading rooms and chat rooms. I was waiting for every news report to come out, and my trading was far too complicated. I wasn't listening to the most important thing was the chart. And so if the chart was telling me that there was some type of uptrend or downtrend, that's all I need to be looking at. So listen only to what the chart is telling you instead of these outside sources, or at least if you have to, keep them at bay, keep them to a minimum. If you're using the confirmation method, you can use this on virtually any trading strategy. It does not matter, but if you get a buy signal in your trading strategy, only buy above the previous bar's high, okay, for confirmation. This will increase your odds for success. And if you get a sell signal, only sell once price trades one tick below the previous bar's low. This is the confirmation method altogether. All right, so that's our second edge. So ask yourself, do you think using that edge could have helped your trading this past year? Okay, just go back and look at your last 5 or 10 trades, see if this could have helped you fine-tune your entry. Remember, it's not saying that it was wrong to either buy or sell. It just could have possibly given you a better entry point so that maybe you wouldn't have got stopped out, or maybe you wouldn't have second-guessed yourself. All right, so this leads us to strategy number 4, our most consistent strategy we have at Specialist Trading. This is a great strategy, and I'm glad to announce that we now have an Expert Advisor add-on for MetaStock users to generate the setup bars for strategy number 4. So I'm going to show you and give you some of the highlights behind this particular strategy and show you some examples using the add-on that will automatically generate the up and down arrows telling you when a setup is in place. But please remember that past performance is not indicative of future results. These examples are for educational purposes only, so please always invest wisely. So let's talk about some of the highlights of strategy number 4. First of all, as I stated, it's our most consistent strategy to date. The beauty of strategy 4 is that it works virtually in any market and in any time frame. Now, it's designed to catch quick momentum moves. Many times you will see this set up in a pullback type of scenario, but other times you will see it in some type of high-level consolidation, okay? As I stated, it works in any time frame, in any direction, in any market, so that's the beauty of it. The average trade using the standard version lasts anywhere from 1 to 10 bars. So if you're looking at hourly bars, it's 1 to 10 hours. If you're looking at day bars or monthly bars, it's 1 to 10 months, okay? Now, as a member of Specialist Trading, we teach you both aggressive and conservative versions. And I'll show you a couple of examples in just a few minutes, but we teach you how to trade it aggressively if you have a larger account or you have a different type of risk management that you'd like to use. And we also teach very conservative ways to use it so you're in and out very quickly. Please remember, once again, our edge, what we teach all our members and with the way I trade and the way I'm trying to really just incorporate in everything that we have for our members, is simplicity. Okay, simplicity equals consistency. I know of so many traders on the floor who had complicated ways of trading, and every once in a while they may have done well, but it's really about keeping things simple that enables you to trade for 10, 20, 30 years down the road. All right, so let's talk about the indicators in strategy number 4. Well, that's it, the 50-period simple moving average. It doesn't get much simpler than that. I told you I like to keep things simple. We only use the 50-period simple moving average. Why? Because strategy number 4 is a pattern recognition strategy, okay? It looks at a minimum of 5 bars, sometimes more, but a minimum of 5 bars to come up with its calculation. And then we use the 50-period simple moving average either tell us to go long or to go short according to this bar pattern. So that's it. And we teach you exactly in the classes how to spot these on your own. But once again, all MetaStock users will have the add-on once you become a member. So you'll be able to see automatic signals generated with the add-on, the Expert Advisor add-on. So let's look at some examples for stocks, okay? Let's start out once again with our favorite Apple. We all know that Apple's been doing terrible over the past year. It's well below the buy-sell line, so there's no way we should even be considering going long Apple this entire time. And as you can see here, this is what our add-on generated for signals to go short. These were all setups to go short that our members would have seen using this, trading Apple on a daily bar basis. If you say, well, Steve, I don't really trade, day trade, or look at daily bars, I look at monthly bars, I'm more of an investor. You know, what you've shown me is kind of intraday trading in daily bars, but I like to look at the big picture. Okay, well, here's a big picture of Apple going back. We're looking at a weekly bar chart. Okay, now, as you can see, we've been well above the 50-period simple moving average line until we got to right the end of the year, first of this year. Okay, well, if we use the add-on for MetaStock, we see that while we were above, all we did was generate buy setups to go long. And then once we crossed over, as you see right here, we switched and went from long to short. We're talking about gold GLD. That a lot of people have been saying, boy, gold is just acting terrible. When are we going to be able to go long? Well, we're not interested in going long gold until it goes above the 50-period simple moving average. So we simply use our Expert Advisor add-on, and we see that this entire time, this entire year, it's been generating sell setups to go short GLD. So there's really no reason to fight the trend. Just look at these setups and you can say, boy, this is unbelievable. The market is telling me everything I need to know. All right, looking at some more charts, Celgene, we see here that we're well above the buy-sell line for the remainder of the year here in this daily bar chart. So the entire time we were just issuing buy setups using the add-on. And there's been a lot of talk in the news lately about Yelp, about how it's expanding, how there's a lot of news going on to it, a big company, it's getting a big name for itself. Well, at the beginning of this year, it went above the buy-sell line. So from that point on, all the add-on did was generate buy signals for strategy number 4. Some better than others, but as you can see, we're in sync with the trend. Now here's a stock I want you to take a look at. Edwards Life. It's been in the news lately, but a couple of months ago, we started consistently generating sell signals using strategy number 4 with the Expert Advisor to go short. And as you can see, they didn't really pan out that great. Every time there was a setup, we went either sideways to even higher. So using the standard version, we were kind of getting whipsawed here for a while, as you can see. But if you decided to use our more aggressive version, which asks you to take a little bit more risk, which allows you to be in the trade longer, you could have sustained these shorts and ultimately reap the benefits as the stock dropped, I believe, on some news that was generated. It dropped about 20%. So it wasn't as if the company called us in the weeks in advance and told us it was going to have some lousy earning reports. Everything that we learned was in the chart. Once again, everything, in our opinion, you need to know is right in front of you. All right, we want to look at some monthly charts, I should say, of the spiders. What a lot of people like to do is they like to look at this in different time frames so that they can determine the lower time frame. If we look back, back in 2012, we see that on a monthly chart of the spiders, the add-on generated a buy signal to go along the spider. So it could have been telling you that as a market indicator, we're going to be rather bullish, okay, on a monthly basis. So you could have easily then, after seeing that, gone down to a weekly time frame, which we have here, and going back to 2012, you saw that we generated about 5 really nice buy signals. Or else you could have used the weekly time frame to go down even further, down to the daily time frame, which we see here going to the beginning of the year, which were all buy signals generated with strategy number 4. Remember, these are all automatically generated. These setups are all generated using the MetaStock Expert Advisor add-on that we have for you. All right, let's look at the E-mini S&P. It just doesn't work for stocks. It also works for intraday trading. Here's an hourly chart going back to the first week of May. As we see here, on an hourly basis, we were above the buy-sell line. So all the add-on did was generate buy signals for us. But if we go to a different time frame of the E-mini, a 10-minute time frame, a couple of weeks ago, we were below on a 10-minute time frame. So we had 2 nice signals generating and telling us to go short. Do you see how we're using these 2 edges I talked about? We're incorporating to some means here both of these in different capacity. We're always using the buy-sell line to tell us whether to go long and short, and then we always incorporate in some capacity that entry technique which we shared. And if you want to go into a smaller time frame, here's a 1-minute time frame for those guys who like to really intraday trade of the E-mini a week or so ago. As you can see, when we were above, the add-on generated all buy signals, and then once we crossed over, we had 2 real nice sell signals using the buy-sell as well as the confirmation technique to enter into the trade. All right, now if we want to look at a different time frame, we see the E-minis here, and we can see that what happens is a lot of times, even on a daily basis, if you like to trade them daily, you'll see signals generated in E-mini to go long. As we see, this last run-up that we just had going into May was all signaled prior in the month of April. All right, how about the Forex? Okay, well, let's look at some Forex markets here. We're looking at right now the euro-yen. The euro-yen has been going straight up, okay, as we can see here. The entire time it was above the buy-sell line. All the expert add-on did was just generate buy signals for us. You can see we incorporate all of our different ways of using the entry technique we talked about. Some signals are better than others, but we teach you in the course as a member where to place your stops, where to protect yourselves, how to trade conservatively, how to trade aggressively. There's another chart here as well. As you can see, we're below the buy-sell line, and we have nothing but Forex currency pair sell signals. And this can also work if you're an investor. This is the Swiss franc, a monthly chart. Okay, if you like to invest in the currency pairs, I know a lot of people like to hold them for long-term positions. The Swiss franc was on a monthly basis well below its buy-sell line, so the entire time it was just issuing nothing but sell signals, and so you could have used these in your portfolio, at least a position or some way to have as a hedge. Many different ways to use this. All right, so let's recap here. We gave you the meaning of an edge. Remember, as I stated at the beginning, when I first started trading in the floor, believe me, I had a difficult time. I know some of you may relate to this, but I was doing well for 3 or 4 months, and then I'd give it all back, sometimes with just 1 or 2 trades. It was extremely discouraging until I came in contact with a few elite traders on the floor. These were my mentors. These were other specialists who taught me what I should be using as an edge. I was putting too much importance on overcomplicating my trading. So they taught me to simplify it, that an edge must sustain me, I must rely on it, but most importantly, it must be consistent. They also taught me about edge number 1, which is the 50-period simple moving average, okay? Simply stated, plot a 50-period simple moving average regardless of what time frame you use. If it's a 5-minute time frame or a monthly time frame, doesn't matter. And if price is above that, you'll only be looking for long signals. If price is below, you'll only be looking for short setups. The second edge is our confirmation entry method, which basically states once you get a signal, regardless of what strategy you're using, whether it's strategy 4 add-on for MetaStock or something else, once you get a signal, use the confirmation method, meaning that only buy once price trades 1 tick above the previous bar's high. If you get a sell signal, sell once price trades 1 tick below the previous bar's low. And then lastly, we showed you numerous examples in all markets, in all time frames, using the add-on for MetaStock for strategy number 4, our most resilient and probably our most popular strategy to date. This is a great strategy because it transfers so easily onto different markets. So, in conclusion here, ask yourself, would any one of these things I've given you today help your trading? Anything from the buy-sell line, confirmation, or as you can see here, hopefully once you become a member, you'll be able to use the add-on for strategy number 4. Remember, in conclusion, simplicity equals consistency. I know a lot of people, for some reason, we've been taught that the more complicated you make your trading, the more chances you'll have for success. But actually, through my 36 years, I've learned it's actually the opposite. The least complicated, the more you simplify your trading, the greater you'll enhance your odds for success, okay? I know tons of traders on the floor who had overcomplicated trading and every once in a while made a ton of money. In fact, they made hundreds of thousands, if not millions of dollars. But I can tell you that not one of them today is even trading. Most of them are out of the trading business altogether. So what we want to do is have that consistency so that we're able to trade 10, 20, 30 years down the road. Now, points to remember as we close up here. I just want to say that we showed you these techniques and these tips and these edges, but please remember, we didn't give you anything in regards to stop placement or exit signals or money management. These are all pieces of the puzzle that you need to have in order to trade a strategy, okay? So I just gave you a couple of pieces of the puzzle to a viable working strategy, but in order to have a complete working strategy, one that's sound and fundamental, you also have to know about stop placement, you have to know about exit signals, and you have to know about money management. How many shares or how many contracts should you be trading? In fact, here's a perfect example. We see here that an open table just a couple of months ago, strategy number 4, the add-on for MetaStock generated a buy signal. So if you didn't know how the strategy worked or how to trade it using these other pieces of the puzzle, you would have just simply blindly taken the trade. And as you can see here, face value, it looked as if it wouldn't work out. But this is what we teach you in the course. Had you used our conservative method, you actually would have broken even on this trade. You wouldn't have lost anything. And here's another example here using a 5-minute chart of the E-mini. Now, the add-on for MetaStock, the expert advisor, signals a setup to go short the E-mini on a 5-minute time frame. So if you didn't understand the way the process works behind the strategy, you would have simply blindly entered into the trade, and then look what happened. It looked as if it would have turned into a loser. But had you used, once again, the tips and techniques which we teach you, you actually could have made money on this trade. At the very least, you would have broken even. So if I can just take a few moments here to talk about what we teach and what we offer at Specialist Trading. As I said, first and foremost, we are an educational website. Even though we generate signals using the expert advisor with MetaStock, we want to teach you the process behind the signal, why they're actually generating buy and sell signals. We want to teach you what that pattern recognition is, along with the tips and techniques, just as the ones I explained to you today. Now, we have courses in each of the 3 markets, from stock trading to E-mini trading to Forex trading. Now, each of the courses comes with anywhere from upwards of 6 to 10 strategies for each of those individual markets, specifically designed for those markets. Now, should you design to become a member of the full package of Specialist Trading, here's what you receive: detailed instructions, such as the instruction I gave you today, numerous trading strategies, as I said, anywhere from 6 to 10 strategies for that particular market. For MetaStock users, you know, as I've been telling you, you have the add-on. You have that add-on for all of you users there, and you can generate buy and sell setups for strategy 4. We furnish you with weekly webinars, archive videos, and a lifetime membership so that you can contact me whenever you have a question or if you need something answered. Now, what we've offered for all the people attending today, and thanks to all the good people at MetaStock and Jeff and everyone in attendance, we have a great discount going for strategy number 4, especially with that MetaStock Expert Advisor add-on. This is strategy number 4, individual course. Rather than buy the full suite of anywhere from 6 to 10 strategies, we're offering it individually. Now, this is usually priced at $695. For the attendees today, we're dropping it down to $495. But this is for a limited time only. This is instant course access, detailed video instruction. We teach you all the entries, all the exits and stops, weekly webinars, PDFs of the rules, and once again, my personal email address so you have access to me whenever you'd like. And as I stated, that comes with the Expert Advisor add-on for MetaStock. So it automatically generates the buy and sell signals for you. All right, I want to first of all thank you so much for waiting till the end of the presentation. I'm sorry I kind of sped things up a little bit. I usually go a little bit slower, but I know we had a delayed start, and I apologize for that. And I want to thank Jeff for fixing things for me. I hope I didn't cause the problem. But here's the information. I will take questions now, but if you want to do a little bit exploring on us, Pro Trader Strategies is our sister site, as you see right here. This is where we sell individual strategies. If you care to ask any questions, you can contact our VP of Operations, that's Brett Marsh, and you can email him at brettm@specialisttrading.com, or you can call us directly at area code 310-844-7220. Okay, so I'm going to take questions right now, but once again, if you happen to come up with a question once we've concluded, don't worry, you can always reach us through these contacts right here, okay? I'll try to backtrack and see some of the questions here that I kind of missed. Let's see. Robert asks, or I should say Larry, I'm sorry, Robert was talking to Jeff. What kind of retracement do you use before putting in an order? Well, remember, it's all in that pattern recognition. I'd love to give you the proprietary pattern, but that's just exclusively reserved for the members. It's remember, it's a 5-bar minimum pattern recognition that sometimes is used in a retracement, but other times it's not. Other times it's simply a high-level consolidation, such as a flag pattern. But it's not based on any of those patterns. It's just a proprietary pattern that was taught to me on the floor that has stood the test of time that I personally use to this day. So I'm sorry, it wouldn't be fair for the people that have purchased strategy number 4 with the MetaStock add-on if I gave away all the rules right now, okay? Yadish asks, how do you avoid sideways markets? It's a very good question. Although you cannot afford sideways markets at all times, I know there's no way to guarantee that all sideways markets will be avoided. There are two things that help. One is the buy-sell line. When you have a sideways market, you don't have these consecutive closes above the buy-sell line, the 50-period simple moving average. Many times you'll see price oscillate above and below. So we want to see at least 2 to 3 consecutive closes either above or below to tell us what side to be on. And if we're oscillating back and forth, well, we don't have any direction yet, so it's keeping us out of the trade. So this is one of the ways. Another way is due to that 5-bar proprietary pattern in strategy number 4 that will keep us out of sideways action as well. It's looking for a specific type of movement and velocity, and this is what's telling us whether to enter or not, okay? So remember, I can't guarantee that it stays out of all sideways markets, but it does a really good job of that, the two things we talked about today. Let's see. Robert asks, please define tick for its users, ticks stocks. Yes, I'm sorry, for lack of a better word, tick is kind of a generic statement Robert was asking. Basically, if you're looking at the Forex, it can be 1 to 3 pips, in other words. So if you're using that confirmation entry technique, you can enter once price trades 1 to 3 pips above the previous bar's high. If you're going short, 1 to 3 pips below the previous bar's low. If you're using the E-mini, it can be an increment, which is usually if you're using the E-mini, which is 25 cents, or what, there are 4 ticks to each point. They're in 25-cent increments. So 4 ticks in each point of the E-mini. So once you go 1 tick above or 1 tick below, that's your point of entry. And obviously with stocks, it's just a cent. It's just a penny. 1 tick equals 1 cent. Okay, I hope that answers your question. Let me see here. We answered that. Yes, it was recorded. Where would you place your stop loss below the low of the previous bar? That's one place you could. We offer, actually, for course members, we offer 7 different stop loss placements. Actually, 4 of those are for specific fixed stop losses, and 3 of those are dynamic, meaning that they change once you're in the trade, and they enable you to stay in the trade a lot longer. So I'm sorry, but that comes with the course. These are proprietary stop loss management rules that we issue to all of our members. Once again, if you really want to take advantage, we're offering this for an extremely low price, especially the discount for all the MetaStock users. And that comes with the add-on as well. So I really highly encourage you to take advantage of that. It's just a great tool. And along with that, we teach you all about stops, entries, and exit placement as well. Okay, let me see if I have any more questions. I'm sorry if I skip some people. I'll kind of backtrack here. Dennis asks, why not use a 50-unit exponential moving average? That's a very good question, Dennis. There's actually nothing wrong with using an exponential. A lot of people always say that, or people will say, Steve, why not use a 34 period or a Fibonacci number or there's nothing wrong with that. It's just been through our experience that, first of all, the 50 period seems to work the best in encompassing all different market environments, okay? As you go into smaller time frames, such as a 20 or a 10 period moving average, what happens is you're only looking at smaller type of moves, and then many times you're only encompassing kind of short-term swings. If you use a longer, such as a 200 moving average or higher, you're looking at the great picture, and you're only looking at kind of like moves that are fit for swing trading or for investing. The 50 period is kind of a nice round number that encompasses trades for all different time frames and markets. Now, the only purpose of using the simple moving average is just simply to keep it simple. I mean, the concept really is what's most important, meaning that if price is above, you'll only look for buy setups, okay? And if price is below, you only look for sell setups. So if you feel more comfortable using an exponential, go ahead. It's really the concept that's most important. The concept is only sell if price is below and only buy if price is above, okay? It's not so much about whether it's simple, weighted, or exponential. It's more about using that concept to filter to make sure you're on the right side. Okay, I hope that answers your question. Let me see, someone is asking about candlesticks. Can you show this with candlesticks? Well, I'm sorry, I didn't have any candlesticks slides on this, but yes, it doesn't matter whether you're using candlesticks or whether you're using standard open, high, low, close bar charts. All that matters is that if you're entering using the confirmation technique, you're entering one tick above whatever the high of the previous bar was and one tick below, whether that bar is a candlestick or a standard high-low open close bar, okay? I apologize for not having any candlestick references here, but that's okay. I mean, we have nothing against candlesticks. They're perfectly admissible. What else do we have here? James, how long? You know what? That's a good question. James is asking, how long does this offer last? I know it's for a limited time only. I'm only saying this so you can speak to our VP of Operations. I would send him an email. I'm sure he can sustain it longer or a little bit longer if you'd like. I was told just for a short time. I don't know if that is a couple of days or maybe just a week or so, but I would contact Brett Marsh, our VP of Operations, and he can tell you how long this offer goes for. You can either email him here or you can actually call him directly, okay? As Jeff just stated, yes, you get instant course access. There's nothing you're going to have to wait for and state, well, I have to get something in the mail or shipped to me. You can be getting the rules as early as tonight if you'd like. We always suggest that all of our members go through the rules thoroughly, understand them, and then paper trade for a while so that you fully understand the process. Remember, along with every membership comes instant access with myself. You can email me anytime you like. I was answering emails this morning at 4 a.m. Pacific time, so anytime you want to email me, you can. That's fine. I'll usually get back to you within the same day, okay? Mike, is there a link for the offer? I would, you know what, once again, I'm sorry, I believe there is, yes, right there, as you can see, Brett@specialisttrading.com. Simply click on that link and it will take you exactly there where you need to go, okay? Or you'll get more information on exactly where that is. You can ask Brett any questions to send you a link or to take advantage of it. Let me just backtrack once again, because I know some people may have been seeing what exactly is offered. Remember, we talked about the two edges today. We talked about the buy-sell line, which is a 50-period simple moving average, and we talked about the entry technique, which is our confirmation technique. These are probably two of our most important edges we have at Specialist Trading, usually reserved for members, but we share them with you today, all the MetaStock users, and they are incorporated in strategy number 4, along with a pattern recognition strategy. Should you decide to become a member at this inexpensive price, at this limited discount here, remember you get instant course access, detailed video instruction. I explain all the entries, exits, and stop placement. This comes with weekly webinars where I give you more tips and techniques each week so that you can understand different things, not only about strategy number 4, but different ways to trade. You can download or upload this to create copies of yourself, to print these on a PDF. Or you can also email me anytime you get a question. This usually runs for close to $700. We've reduced it down to $495 for the attendees today. Let me just go back to the question and answer portion. What is the duration of the membership? Well, as I stated, the membership is pretty much lifelong. For a year, you will, most people spend a year really being hands-on, asking questions, but I would venture to say that after 3 to 6 months, most of the things you need to know about the strategy, you already know. And that's the membership just includes your membership to Strategy 4 and asking me any questions you'd like and any type of signals that are generated. You have the add-on for MetaStock, so you'll see that the signal setup bars are generated automatically. It's really about being able to be in contact through email with me, and you can do that as long as you'd like, okay? Ed asked, what is the win-loss ratio? Well, remember, as we stated, this is a strategy. You can only perform any type of win-loss ratio or any type of systematic numbers to a entirely rule-based system. That means where everything is traded the exact same way each and every time. That's a system. As you see here, this is a strategy, and a strategy is about 65% rule-based, with roughly about 30-35% discretion involved. And the discretion is all the tips and techniques I teach you, such as trading aggressively, trading conservatively. If we had to give you a number, we would say roughly about anywhere from 60 to 65% win-loss ratio. But we don't, remember, we're not a systematic company. As I stated at the very beginning of the presentation, we are an educational company. We want to educate you so you can fine-tune the strategy to meet your needs, okay? I hope that answers your question. Robert asks, can an indicator of yours be bought independently, or are they included in MetaStock? Yes, they are included. We really want you, though, to understand the entire process. I mean, we want you to purchase the course because, as I stated just in the last question, we are an educational company, okay? I don't really want you to blindly see signals setups generated without really knowing how the process works. So in order to really use the add-on properly, I would suggest purchasing the course so that you understand the rules behind it and seeing exactly how it works, okay? So I believe you can purchase it independently, but not at the same prices. I think actually we have this great discount for the purchases of the strategy as well. Any other questions while we still have? Once again, I just want to apologize for starting a little late. I hope I didn't rush things, and sorry about the sound difficulties in the beginning. Okay, I'll just take you one last time to the informational page here. Remember, if you want to get more information about our individual strategies, we have many more strategies other than strategy number 4, but I honestly have to say strategy number 4 is probably our most resilient strategy. It transposes onto any market at any time frame. And if you want to ask questions, once we've concluded, you can email Brett at BrettM@Specialist Trading about that great discount we have, or you can call us directly at 310-844-7220. Then Robert asks, what do you call the 5-candle indicator? That's a totally different strategy, which we didn't go into today. That is more a Forex strategy. That's actually strategy number 5 for the Forex markets. But that's a totally different strategy, and it's only built for the Forex market. So I really didn't want to go over that today. Yes, Mark, it does include the nightly picks, but remember, these are for educational purposes only. We're not just a signal generating company. We want you to understand and be able to spot the nightly signals on your own. And remember, once you become a member, you're going to get the Expert Advisor add-on for MetaStock, so you'll be able to see the picks on your own as well. It will automatically generate, as you saw, those up and down arrows for setup bars, okay? All right, in conclusion, I guess that brings us to the end of the presentation. I want to thank you so much, and I especially want to thank all the good people at MetaStock, and thank you, Jeff, for helping me out. Sorry once again about that problem we had. I hope you were all able to see and hear everything properly, but I want to really thank you for inviting me to speak, and I really look forward to all of you becoming members of Specialist Trading. Thank you so much.